Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to give a quick market update, look across the different asset classes, check in how they've been reacting to some of the developments this week, and talk about some of the major themes that are going to be potentially affecting the rest of the week. So let's jump right into it. Okay, we've got the S&P 500 here, or this is the CFD for the S&P 500 that kind of tracks the futures. And you can see that, yes, Monday was slightly negative, but we had a big jump on Tuesday, and in pre-market trade, or actually just after the open on Wednesday, we're pretty much trading flat. But for the most part, we're up on the week, yeah? It's like we're just below 2% higher. So not a bad week. What's been going on to boost risk appetite? Well, let's talk about the fundamentals first. You've had reports on Tuesday that Russia is going to restart gas flows on Thursday when the planned maintenance of the Nord Stream 1 pipeline finishes. And that has eased worries, basically, of a European recession, because if Russia was to halt gas flows, it would cause a recession in the Eurozone. I think the IMF was saying earlier in the week that in some of the most reliant on Russian gas countries, like in Central Europe and Italy, they could see a contraction of like 5 or 6% of GDP, just because they'd have to ration gas and prioritize it towards houses, therefore halting industry. So that is, well, we're going to have to wait until Thursday, and that's going to be a key event to be watching in the second half of the week. But the fears surrounding that have eased for now, okay? So that's helped risk appetite, certainly helped European assets anyway, and it's having an impact on the US as well. Helped the S&P 500 hit its highest level since, the 10th of June today. The other thing is earnings have been, for the most part, better than expected. Not necessarily good, but better than expected. Like, you had Netflix jumping. I think they reported actually after the close on Tuesday. First major big tech company, better than expected earnings and slightly better than expected outlook. And for the most part, it's been a strong start to the earnings season. I mean, the only bad earnings from a major company that I can think of so far was probably IBM, that reported a big loss because of dollar appreciation. But that's not even the worst thing, really. Like, the thing we're worried about with US earnings is that it's going to point to a bigger slowdown in the economy than expected, which doesn't seem to have been the case at this early stage. But we're going to have to see. We've still got a lot of earnings ahead. But if earnings continue to be positive, then we could continue to appreciate. Technicals as well are at play. We've had this downtrend that I've been sort of monitoring and talking about for quite some time, sort of roughly here. Well, it looks like Tuesday's move marked a sort of quite significant break above that downtrend. We're not above this previous high yet, and actually, let me just get some moving averages on here as well. We can get the 21-day moving average, you can see, just popped up there. We're above that. 50-day moving average. We're above that now as well, okay? So that is a good sign, technically speaking, anyway. And especially if we continue to slowly rise, and then the 21-day moving average, which is just down here, rises above the 50-day moving average, which is just here, that would be another sign of a change in near-term technical momentum. Let's just see where this 200-day moving average is. I think we've still got a way to go to get to that. So we're not really talking about that at the moment. But if the S&P 500 is able to break above this area of resistance here, then the next target you would presume would be, well, moving above 4,000, which is here, and then targeting this high here from late May, just above 4,200. Okay, so that's what's going on in US equities. Let's have a look at currencies next. I mean, we can start off with the DXY, the dollar index. It's pulled back this week as a function of risk-on flows, also as a function of recent data dampening bets that the Fed is going to do 100 basis points. I mean, no one's expecting 100 basis points anymore. That was just a brief blip after last week's, hotter than expected CPI. But yeah, it seems as though it's going to be 75 basis points. And when you've got that combined with risk-on flows, that's why we've pulled back. But we're stabilizing in the mid 106 area. And we've got the 21-day moving average now at 106, which seems to be offering some support. And then obviously you've also got these levels, which are offering some support as well. There is a risk that we could break below this area as a function of a move higher in euro dollar. Remember, euro dollar is the most important constituent of the Dixie. So let's have a look at euro dollar quickly. Still hasn't tested this key area of resistance around 103.50, now hitting its 21-day moving average. But we do have the ECB coming up, and there was reports earlier in the week that the ECB might be thinking about going 50 basis points with a 50 basis point rate hike at this meeting. Previously, they'd been guiding towards a 25 basis point rate hike. So perhaps they go 50 and it causes a bit of a rally above here. Maybe we even get a bit of a short squeeze if some people are... I mean, this does look like quite an obvious area to add to shorts and then target a retest of yearly lows. Maybe people are piling their shorts in this area around 104. Just something to be bearing in mind. Could take us up to the 50-day moving average, and even this trend line that I was marking up earlier in the week around there. Okay, but when it comes down to it, the Fed's still much more aggressively tightening than the ECB. The US economy is holding up better than the Eurozone economy. So I do still think the long-term trajectory for euro dollar is going to be to the downside, just with a bit of choppiness. Obviously, if the gas flows resume on Thursday as well, that eases European recession fears, which should also be a positive. What else we got? Why don't we have a quick look at oil and finish off with that. Oil, well, it was threatening a break above this sort of downtrend, but that does not seem to have materialized, and it looks like we're dropping back again. Okay, so not looking good for oil. Remember, some of the things that can boost stocks, like earnings, that doesn't really help oil, you know, unless you're talking about a booming economy, which we're not. Central bank easing, I mean, if it boosts the economy, which central bank easing should eventually, then it can boost oil. But if it's central bank easing or a paring back of hawkish bets because you're worried about economic weakness, then that's not necessarily good for oil. I mean, oil is falling because we're pretty much talking about the global economy slowing, and we're still talking about that. Obviously, we got this key area of support though, March and April lows, well, late March and April lows, and then the 200-day moving average, that's in like the mid-90s area. Are we going to go back and test this area? Quite possibly. Break below it. I mean, a break below it, yeah, that could open the door to quite a lot of selling. Maybe, I mean, this is sort of the next area you'd be looking at, 85. Oil, from the supply side though, oil markets are still pretty tight though. OPEC struggling to increase output. The Saudis this week indicating that they're pretty much not going to hike any faster than they already are. I mean, it's only really the Saudis and the UAE that actually have the capacity to drastically increase output. Everyone else is pretty much maxed out. So, I mean, maybe recession concerns could push us down to 85, but I would expect that we would probably get support in this area, to be honest. But yeah, in the short run, we could definitely get there. But yeah, guys, anyway, ECB, main event of the week. Does Russia restart gas flows? That's on Thursday as well. That's important. You've also got the BOJ deciding policy on Thursday too, but they're just going to be ultra dovish as usual, probably, which should, if anything, be a negative for the yen. You got PMIs out of the UK, Eurozone, and US on Friday, which should be quite interesting. Speaking of, let's just give a quick update actually of the UK and what sterling's been up to. You can see it's kind of, you know, amid this dollar weakness, we've recovered a little bit from annual lows below 118, but we're struggling to stay above 120, and that is despite data this week surprising, or being basically pretty strong. Like, we had jobs data yesterday which showed that the unemployment rate remained at 3.8%, so still a tight UK labour market, and then UK CPI hit 9.4% year over year. That's the headline, a little bit above expected. Very much the data this week solidifying expectations that the bank is going to do a 50 basis point rate hike at its next meeting in August. But the thing is, 50 basis points, like, who cares? Like, we're in a world where the Bank of Canada just did 100 basis points. The Fed's going to do 75 basis points. So, yeah, obviously another factor to watch for sterling is this ongoing race to replace Boris Johnson as the leader of the Conservative Party and the Prime Minister of the country. And if it is going to be Rishi Sunak, which it's a bit of a coin toss between him and this other person, this other MP called Penny Mordaunt. But if it is Rishi Sunak, then that's probably just going to be a continuation of the current policies, which won't mean much for sterling. But anyway, yeah, that's sterling. That's the video, guys. Hope you enjoyed it, and I will see you all in the next one.